Stop scrolling for a second. If you've watched Binance Futures tutorials before, tried trading crypto futures, and still ended up losing money, this is not because you're bad at trading. The real reason is simple. 99% of futures tutorials teach you the wrong order. They show you how to click buttons, how to open a position, how to use indicators, but they never teach you how to think before you trade. That's why futures feels like gambling for most people. In this video, I'll show you how to trade Binance Futures in the correct order, so you actually understand what you're doing instead of guessing. What crypto futures really are, let's get one thing clear first. Crypto futures are not magic, and they're not a scam. A futures contract simply allows you to make money when price goes up or when price goes down. That's it. The reason people lose money is not because futures are dangerous, but because they use leverage without understanding risk, context, and structure. Spot trading forgives mistakes. Futures punish them instantly. If you treat futures like spot, you get liquidated. Why most people feel confused? You might be wondering why every Binance Futures tutorial feels different. One video tells you to use RSI. Another tells you to use MACD, another shows you a random strategy that worked once. The truth is, most creators are teaching fragments, not systems. They teach tools without teaching decision-making. Tools don't make money, decisions do. The correct order before you trade futures. Before you even think about entering a trade, there is a correct order you must follow. First is context. You must know whether the market is trending or ranging. Second is bias. You must decide whether you are looking for long opportunities or short opportunities. Third is risk. You must know how much you are willing to lose before you think about how much you can win. If you skip these steps and jump straight to entries, you are not trading. You are gambling with extra steps. Why indicators are not the first step? Most beginners start with indicators because they feel safe. Numbers feel objective. Signals feel reassuring. But indicators are lagging. They react to price. They don't predict it. When you rely on indicators first, you always enter late, you panic early, and you exit at the worst possible time. Indicators should confirm your idea, not create it. Setting up Binance for futures trading. Now let's move into Binance itself. If you don't have a Binance account yet, you can register using the link in the description and enter the referral code BACK20 to get a 20% fee rebate on both futures and spot trading. That fee rebate alone makes a huge difference over time, especially if you trade frequently. Once your account is verified, transfer USD from your spot wallet to your futures wallet. This is the capital you will use to trade. Understanding futures types on Binance, most beginners should focus on USD to margin futures. These are easier to understand, easier to manage risk, and simpler to calculate profit and loss. Coin margin futures add unnecessary complexity when you're still learning. Keep it simple. Simplicity protects your capital. Cross vs isolated margin. This is one of the most important concepts beginners ignore. Cross margin uses your entire futures wallet as collateral. Isolated margin limits your risk to a single position. If you are new, you should almost always use isolated margin. Cross margin is how beginners lose their entire account in one bad trade. Leverage explained without hype. Leverage is not your enemy. Misusing leverage is. High leverage does not mean higher profits. It means smaller margin for error. Professional traders don't use high leverage to get rich. They use low leverage to survive. If your account is small, your priority is not profit. It's staying in the game long enough to learn. How to think about risk before entry. Before you click buy or sell, you must already accept your loss. Ask yourself this question. If this trade loses, will I still be emotionally stable? If the answer is no, your position size is too big. Risk management is not about maximizing gains. It's about minimizing regret. Basic order types you must understand. On Binance Futures, there are only a few order types you actually need. Market orders are for speed, but they often cause bad entries. Limit orders give you control and better prices. Stop-loss orders protect you from disaster. Take-profit orders protect you from greed. If you don't know where your stop-loss is before entering, you should not be in the trade. Stop-loss is not optional. A stop-loss is not a sign of weakness. It is a sign of professionalism. Every trade is wrong until proven right. If you refuse to use stop loss, futures will eventually force you out of the market permanently. Position size and liquidation logic. One of the biggest mistakes beginners make is focusing on entry price instead of position size. Liquidation doesn't happen because price moves against you. It happens because your position size is too large for your margin. If you don't understand how liquidation works, futures will always feel random and unfair. In reality, liquidation is just math. Smaller position size means more room to be wrong. Bigger position size means zero forgiveness. Why most trades fail psychologically. Most losing trades don't fail because the setup is bad. They fail because the trader panics. Fear makes you cut winners early. Greed makes you remove stop loss. Hope makes you hold losers. Futures amplify emotions because money moves fast. If you don't control your emotions, leverage will control you. THE simple risk rule that saves accounts. Here is a rule most successful traders follow but rarely talk about. Never risk more than you are comfortable losing emotionally. If losing a trade ruins your mood or your day, you are risking too much. Trading should feel boring. If your heart rate spikes every time you enter a position, something is wrong. Checklist before entering any futures trade. Before every trade, slow down and run through this mental checklist. Do I understand the market context? Do I have a clear directional bias? Do I know exactly where I am wrong? Do I know how much I will lose if I'm wrong? If any of these questions don't have a clear answer, you don't take the trade, no exceptions. Why not trading is also a decision. One of the most powerful skills in futures trading is doing nothing. The market does not pay you for activity. It pays you for discipline. Some days have no good setups. Forcing trades on those days is how accounts slowly bleed out. Protecting capital is also progress. A simple live trade logic example, trending down. I am not looking for longs. I wait for price to pull back into resistance. I define my stop loss before entering. I calculate position size based on that stop. I place the trade and walk away. No prediction, no hope, just execution. Why win rate does not matter as much as you think. Many beginners obsess over win rate. They want to be right all the time. Professional traders don't care about being right. They care about risk to reward. You can be wrong more often than you are right and still make money if your losses are small and your winners are controlled. The most common futures mistake. The most common mistake in Binance Futures Trading is entering without a stop loss and planning to add margin if price goes against you. This is not strategy, this is denial. Futures do not forgive denial. They liquidate it. How to use take profit properly. Take profit is not about catching the exact top or bottom. It's about consistency. Greed kills more accounts than bad analysis. Define your take profit when you enter, not when price is already moving in your favor. Why consistency beats strategy. People spend years searching for the perfect strategy. The truth is, a simple strategy executed consistently beats a complex strategy executed emotionally. Futures reward discipline more than intelligence. Final thought before you trade. If you remember only one thing from this video, remember this. Futures trading is not about making money fast. It's about not losing money stupidly. Once you stop bleeding, profits have space to grow. If you found this tutorial helpful and you want to trade on Binance with lower fees, use the link in the description and enter the referral code BACK20 to get a 20% trading fee rebate on both futures and spot. That fee reduction alone can significantly improve your long-term results. Subscribe to the channel if you want more clear and honest futures trading education without hype. And remember, trade less, think more, and protect your capital.